All right, let's go ahead and move on to Elon Musk and to Twitter. So on Friday during the live show, we had the breaking news that Elon Musk had offered $54 per share to Twitter and that Twitter was considering it. We can now bring you the news that Twitter has rejected that offer with a so-called poison pill. Let's go ahead and put this up there on the screen. So the Twitter board adopted this poison pill after Musk's $43 billion bid to buy the company. Now, it's a little complicated, so let me just try and explain it to the best of my ability. The way that these poison pills work is that they were invented in the crazy hostile takeover days of the 1980s, where the Twitter board says that if any person or conglomerate accumulates more than 14.9% of Twitter stock, they will begin issuing millions of more shares to broader public investors. The reason this matters is that the Musk offer is a per share offer. So what it would do is A, it would dilute the stock, but B, what it would do is make it much more of an expensive ability in order to offer to buy the broader company, especially whenever you create millions of shares out of thin air. It would significantly inflate the purchase price and make it much more difficult in order for Musk and them to acquire the company. Now, this has spawned a lot of discussion around corporate governance, shareholders, and more. And the way that we have to understand this is, while yes, it matters as to who the broader shareholders are, publicly traded companies are subject to the governance of their board of directors. Those board of directors, despite owning less than 2% of the entire company, which is less than Elon Musk, which is less than even Vanguard and many others, still have the ability to reject and determine the course of action for the company. And it really raises a lot of questions of how exactly are these things run? It seems a little ridiculous, when you think about ownership and then corporate governance, but it's a long-standing corporate practice in order to try and reject hostile takeover efforts. Apparently Netflix did the same thing when Carl Icahn tried to run a similar thing on the company back in 2012. That's the most recent example of a tech company kind of rejecting these hostile takeover type bids. Let's put the next one up there on the screen, because what you can see is that there's also a lot of behind the scenes shenanigans which are happening, which is that Musk himself now is no longer the major Twitter large shareholder. Now, Vanguard Group actually upped their stake in the company all the way up to 10%. Now, we don't exactly know the reason why Vanguard has decided to up its stake. It does seem very much in direct reaction to Elon Musk, and perhaps it's an effort to perhaps influence the board more and perhaps show that they are allies in the system. Look, many of these board members and BlackRock and other large shareholders don't have any interest in Elon Musk taking over the company. And not unfairly, because the one thing I do want to say is this. Musk gave an interview on Friday where he said, quote, "I don't care about the economics at all of Twitter." He's like, "I view this as a editorial project of which I want to protect free speech. I don't care about the business of the company." So if you're a shareholder, that's not the best thing. At the same time, Musk is offering you a buyout. And it's kind of hilarious that Twitter's board is actually being advised by Goldman Sachs in terms of how in order to defeat all of this. Well, it turns out that Goldman Sachs itself has a sell rating on Twitter and says that the price target on it should be $30. So by their own analysis, the Twitter as a company and a business is terrible. And using Musk's metric, he's offering you an insane...
offering to overpay.
Not just overpay, almost double what the Goldman Sachs says that the company is truly worth, which is kind of hilarious. So you put it all together, the Twitter board then has outright rejected it. We don't yet know how this is going to play out. Though things inside of Twitter are a bit chaotic. However, we do know this, that Musk has said that there was a plan B that he said that was on the stage. He said he is looking to work with possible other shareholders. So this saga is not over yet. I think the best way to think about it is, Marshall made this point on our live stream. I thought it was excellent, which is that this is like him buying a newspaper. He wants to look at this thing. He's like, I have a vision for Twitter. I don't really care about the business. It's actually kind of a terrible business if you look at it. And so this is the vision of the world that I want to see.
Well, and there's so much that's fascinating about this. First of all, as I've said before, I sort of view all these billionaires the same, but there's a lot of partisan filtering of which billionaires people like and which ones they're comfortable with. And we're going to get later to the media freak out over this that you certainly did not see when Bezos was buying the Washington Post, for example. But I think if you do think of it in that framework of this is like buying a newspaper, then people start to understand more like, oh, then this isn't just purely a money-making venture. Because that's what makes this so unusual is usually when you have these hostile takeover bids, activist investor, all of these activist shareholders, all of these things, it usually is about, I think this company from a financial perspective is being run poorly. I think we could make more money here. Not like, I think their values are wrong.
Right.
And so you have this complicated mix of like ideology and financial incentives that makes the picture confusing for people to understand whose motives are what. In that live streamed interview that you referenced, Elon Musk spoke to the TED conference. It was so
classic.
cringe, whatever.
I can't believe it's still around.
I know.
Yeah.
I was thinking the same thing. I was like,
Yeah.
oh, we're still doing this? Anyway, he spoke to TED 2022 in Vancouver in a live streamed interview. And he partly laid out his vision for making Twitter's algorithms more publicly accessible, something I would certainly welcome. Limiting content moderation, something else I would certainly welcome if it's done in a consistent and, again, transparent way. He acknowledged he's not sure that he's actually going to be able to pull this thing off and buy Twitter, though he did say he has sufficient assets to fund the deal if accepted. Most of his assets are tied up in equity in his companies, so he'd probably have a big tax event if he had to. He'd have to like sell his stock, whatever, and have an actual tax event and pay some taxes. That's not a bad thing.
Yeah.
But Musk did say there is a plan B if his initial offer to buy the company and take it private, which he called his best and final offer, is rejected, but he isn't saying what that plan B ultimately is. So, the big thing to take away from the poison pill that's been adopted here and Musk's comments from, directly from him is that this is far from a done deal.
Yes.
Whether or not he's ultimately able to pull this off and ultimately able to, take over Twitter. And he wants to take it private, by the way, too. That's the other plan here. And I completely believe him that, his motives have to do, they are not just directly financial. And so, yeah, if you're a shareholder and you're just in it for the money, even if you don't care at all about content moderation or free speech, if you're looking at this guy who's going to take it over and is like, I don't really care what the returns ultimately are, yeah, you're probably not going to be too excited about that.
Yeah, and look, this is keeping with his behavior. I actually read over the weekend, reread actually, 2017 book, a biography of Musk, Elon Musk, Tesla, SpaceX, and the quest for a fantastic future. I highly recommend it if you want to kind of understand how Musk ticks. This is long-standing in his behavior. If you look at SpaceX, for example, he refuses to take the company public because he does not want SpaceX subject to the same whims of Tesla. As you've seen with Tesla, like short sellers, quarterly earnings, he's like, you cannot plan for the future in the realistic company whenever you're subject to the whims of the stock market. So even though SpaceX, I think, is worth like $70-something billion, refuses to take the company public exactly for this reason and doesn't want to be subject to the street. So he has a long-standing kind of love of private companies. And the only reason he even wanted Tesla to go public in the first place, because at the time, he actually needed the money and has long hated kind of Wall Street's machinations all behind the scenes. Anyway, it's interesting and fitting with his broader worldview.
Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.